one, welcome back to my YouTube channel. Welcome back one, welcome back. Now we have more update coming out from the market, a lot of stuff for us to talk about. So there have been a lot of stuff been going on since the market right now is exiting our technical bear market, but however it's still unclear whether or not the market will maintain this momentum, which is very concerning due to rising FUD. That is what we are talking about here. Okay, let's look recently. Coinbase they released their second quarter earnings, which was not that impressive. They have bring in million of dollars, but however, they did post a $1 billion of net loss in their second quarter. So that is what we are seeing. We are now seeing trading volume on the exchange fell by 29% in the second quarter due to FUD. That is what we are talking about. And the crypto bear market actually dragged in decreased trading activity here, since investors are more concerned whether or not they are able to make any profit during this bear market, but for long-term holders continue to accumulate despite their losses. That is what we are seeing. As of now, though, Coinbase did post a very impressive quarter. They did miss economics expectation, but however, they did somewhat near economics expectation. So Coinbase is underperforming compared to an asset expectation, post $838 million revenue compared to an $832 million forecast. So they were short around $30 million, but that's pretty impressive for Coinbase to bring in. So we are going to continue to see more. But however, they are seeing a slowdown in transaction, a decline in transaction on the platform, totaling around $9 million, which was down 200,000 transaction within the past 3 months here. So let's see. Compared to the same quarter a year prior, Coinbase showed a gain of the same amount and 200,000 monthly active users over the course of a year. So they did post a 1.1 billion net loss. That was pretty big chunk coming off from their money. So that's what we are seeing right now. Inflation bear no mercy. So Ford just decided to hike up another $8,500 on the electric F-150 Lightning due to a significant rise in battery costs and natural resources. We are going to see more uncertainty within the market as things continue to progress. When the Fed continues to hike up interest rate, the market tend not to perform very well, and this is just the beginning. So stock price for the 2023 F-150 would range from $47,000 up to $97,000. So they are up between $6,000 and $8,500. So that's what we are seeing. Ford is the latest automaker to increase pricing due to rising costs of supply chain. That's what we are seeing. So this is just the beginning, folks. Inflation is still on the rise, but however, we have seen a decline in inflation in the month of July, due to a decline in natural resource or oil. So that's what we are talking about. And Rivian did post a quarter earning, which they record a $1.7 billion loss. That was a big chunk of loss within their portfolio, which was very shocking to many investors here. So they did lost $1.7 billion in the second quarter of 2022, and they are now trying to ramp up their vehicle production amid ongoing supply chain crunch. So they did lay off some of their workforce a couple weeks ago. We did cover about that. So right now they did post a significant loss here. So not very confident in Rivian. I'm more confident in Ford, since Ford is a well-known company and has established a strong financial infrastructure that can survive a bear market. That's why Ford is always better. So inflation is hurting everyone, especially in the restaurant business. Let's look here. $15 for a french fry and $18 for a sandwich in New York City. So inflation has hit the low income and the middle class. They have hit the low income the most significantly. And with the price of good, especially within food, which we have seen food had risen up in the month of July. $15 for a french fry, $18 for a sandwich. That is what is increasingly crazy. This is so crazy of how expensive food is getting. So, so right now, inflation really put people on the hinge. Not only that, let's look at Manhattan rent. Manhattan rent just for the second time jumped back above $5,000 due to a decline in housing supply. So there are now less supply in the housing market in New York, which drive this price up above $5,000 per month. That is crazy, and we are going to continue to see more landlords to hike up their rent to the point that consumer cannot afford to rent. Then we are going to see people being driven out of Manhattan. There might be an economic slowdown, such as when things go up really high, we are going to expect a pop. If there is no way to mitigate the possibility of a rent hike above our imagination, the balloon soon will be popped. That's why we have trouble sign in 2008 and many more series of economic recession within the past 2 or 3 decades, which we have seen the dot-com bubble. So no mitigation. When it bursts, everything collapsed as a result. This is just another example of the housing market. Okay, folks, let's move forward to layoff. Right now, Peloton is planning to slash 780 jobs, closing some of their stores, and even hiking up their prices in order to turn for profit due to rise in interest rate and high cost of goods and labor due to inflation. That's what we are seeing. They are planning to cut 70, 80 jobs, and just that is just the bare news that we are receiving. So right now, they say like they did not specify how many retail locations they are planning to shutter. So it might be a lot. I believe around 2/3 of their retail location might be shuttered, but there's still a likely chance of it being lower. However, we still are unclear. So they are reevaluating the situation within each geographical location, whether or not each geographical location have bring in enough profit to maintain their business. So this is what a problem. When the Fed get hawkish, oh, these tech gonna get hawkish too. So that's just the beginning, folks. Google said executive even threatened workers with layoff. This is just another sign of tension. We are gonna continue to see more stuff coming out, and a lot of concerning stuff. Right now, people are fearing of job insecurity, the inability to maintain and hold a job due to the rise in risk of being laid off by the employer. This is a mounting concern that many American people are now wondering whether or not they will be the next victim because right now inflation is eating most of their pocket. They have used all their money from their saving account, so it's going to bear a lot of financial responsibility and a lot of stuff coming out. So in the end, though, we still have more stuff coming out, but there's still great uncertainty within the market. Even though we are now exiting a technical bear market, we might, however, in the future, near future, might be pulling back into a bear market. So we are still evaluating the situation as the situation continue to be very flexible and changing in every second. Thank you, everyone. Have a nice day.